Monthly payments are headed to low-income households thanks to changes to the child tax credit in 2021. This is basically a monthly stimulus payment for low-income families, and I'm so excited to give you all the details in this video. I'm Nicole from Low Income Relief, where we help millions of people save money and get free stuff. In this video, we're going to review a few of the critical changes and what you need to do in order to claim these monthly payments. It's important that you stick around until the end of the video, or you may miss important steps that you need to take in order to receive these payments. Before we launch into the video though, please take a moment to smash that like button and enable notifications so you never miss another one of our important low-income updates. We're here to help people save money, get free stuff, and make ends meet, and every single subscriber and viewer helps our message reach more people. Thanks for helping. All right, let's get started. The American Rescue Plan that President Biden signed in March made some enhancements to the child tax credit. The changes are temporary and only apply to the 2021 tax cycle unless Congress extends them or makes them permanent. Before the changes, families who met the income requirements could receive up to $2,000 in tax credits per qualifying child. The general structure of the child tax credit remains in place, but some important details have changed, and these changes mean that low-income families could start to receive a monthly check later this year. First, there are larger credits this year. The maximum credit has increased. Families who qualify for the child tax credit may receive up to $3,000 per child, ages 6 to 17, and $3,600 for children under the age of 6. However, these higher credits phase out faster than they used to. According to CNBC, the full value of the credit will be provided to single adults whose annual incomes are $75,000 or less, head of household filers whose annual income is $112,500 or less, and married joint filers whose annual income is $150,000 or less. The amount of the credit gets smaller as a household's income gets larger. Households that make too much money for these higher credits may still be able to receive the child tax credit under the previous law. Second, the credit is fully refundable. Previously, low-income households could only receive up to $1,400 of the credit as a tax refund. The other $600 could be used to offset taxes owed, but it could not be refunded directly to the household. The 2021 changes make the credit fully refundable so that the total $3,000 or $3,600 for younger children can be paid to families directly. Third, there are no income requirements. Under the old rules, you could only get the refund if you earned at least $2,500 of earned income. This left out very low income earners and people with disabilities. The 2021 child tax credit changes have removed the earned income threshold so that those with disabilities and very low incomes can still claim this credit. Fourth, more children will qualify for the child tax credit. The child tax credit rules state that a qualifying child must be a U.S. citizen, national, or resident, under age 17 on the last day of the tax year, and the child must be a biological child, stepchild, adopted child, sibling, step-sibling, half-sibling, grandchild, niece, or nephew. In addition, the child must have lived with the taxpayer for more than half of the year, must not have provided more than half of their own support for the year, and cannot file a tax return with the status married filing jointly. Babies born later in 2021 will still be considered as having lived with you the entire year, so they are eligible for the credit. According to CNET, families may receive an additional $500 for 17 and 18-year-old dependents. If their 19 to 24-year-old dependents are attending college full-time, they may also be provided an additional $500. The American Rescue Plan made it possible for families in Puerto Rico to receive this credit as well. If you share custody of your child with another parent, it is very important that you determine who will be claiming the child on the 2021 tax return, because only one parent can receive the tax credit advance. If you receive an advance and it's later determined that you were not eligible, you may have to pay all or part of it back to the IRS. As you make this decision, it's important to know that the Congressional Research Office has said that the new advanced payments cannot be seized for past due child support. Fifth, part of the credit will be paid as monthly or quarterly payments. The new law has also ordered the Treasury Department to issue the child tax credit in payments, starting as early as July 1st. Instead of receiving all the money at once with your tax refund, the IRS is providing eligible households with an advance on half of their expected 2021 credit amount. Low-income families are expected to receive up to $300 per month for young children and $250 per month for older children. The payments are supposed to begin in July and continue throughout December. It is expected that you will receive these advance payments the same way that you receive stimulus payments. If you received all the stimulus payments via direct deposit, it's likely that these payments will arrive the same way. However, others may receive them on a direct express card, paper check, or EIP debit card. The hope, of course, is that these extra payments will reduce food insecurity, promote housing stability, and help households better manage their monthly bills. CNBC warns that the IRS is currently forecasting that the payments will be made monthly, but there is a chance they will be sent quarterly. That means you'll either receive a smaller amount each month or a larger amount every 3 months, depending on what the IRS can manage. Sixth, you will need to file a return in order to receive the advance payments. Taxpayers must file a tax return in order to get these advance payments. This is true even if you don't normally file a return. Remember, the IRS is going to estimate your 2021 child tax credit based on the information that you provide in your 2020 tax return. If you don't file your 2020 tax return in time, they will work off of information provided in 2019. If you haven't filed in either year, that means you will need to file a tax return so that they have information to work with. This includes people who don't usually file tax returns. This is important to note because many people who receive disability payments and don't have an earned income do not normally file tax returns. However, they've opened up the child tax credit so that those households are eligible for these credits, but you will not get them if you do not file a tax return. The IRS has extended the tax filing deadline to May 17th, so it's important to take action quickly. Of course, if you don't want to get the child tax credit payments in advance, the IRS is expected to roll out an online portal where you can opt out. The portal will also give users a chance to update their information, such as changes in income, filing status, or the number of children. Seventh, low-income earners may be protected from repayment. Normally, if you receive money that you're not eligible for, you're expected to pay it back. However, low-income earners may be protected from repayment in certain circumstances. Up to $2,000 per child may be protected from repayment if the error is due to changes in the number of qualifying children. Any amount over $2,000 would still have to be repaid. In order to be eligible for the full $2,000 repayment protection, you must meet income requirements. The maximum income is $40,000 for single filers, $50,000 for heads of household, and $60,000 for married couples filing jointly. The amount protected from repayment slowly phases out based on a household's income. No payment protection is available for households who exceed an annual income of $80,000 for a single adult, $100,000 for a head of household, or $120,000 for joint filers. On April 13th, IRS Commissioner Charles Rettig stated that the IRS fully expects to launch their online portal by July 1st. Make sure you get those tax returns in by May 17th, and make sure that you subscribe to our channel for more ways to save money and get free stuff.